Good morning, ladies and gentlemen. Welcome to FSS Africa Payment Focus. We appreciate that so many of you have joined from across the continent and from other parts of the world. My name is Rishi Pillay, and I'm the regional head for FSS in Africa. FSS comprehensive payments portfolio enables banks, central regulators, governments, financial intermediaries, merchants, and payment associations to leverage opportunities in today's dynamic digital world. Our solutions help clients transform businesses digitally, improving performance, technology, and operational efficiency in 6 key areas: payment processing and switching, issuance, acquiring, digital banking, digital security, and back office operations. Globally, over 2,500 payment domain experts and payment system integration specialists bring together strategy, consulting, and execution to provide clients a leading edge. I will be going over a few housekeeping items before we get started. So your dashboard is on the right-hand side of the screen, and you can open and close this throughout the webinar by clicking on the orange box with the arrow on it. On the dashboard, you will find all the features I'm going to take you through next. You join the webinar using VoIP or by dialing in via a telephone landline. If you get cut off or cannot hear well using VoIP, then select the audio option for dial-in and you'll be given the dial-in line numbers with the webinar access code and audio PIN. All attendees are in listen-in only mode, so you are not able to ask questions verbally. Please submit your questions in writing through the questions area on your dashboard. Feel free to send them to us during the webinar. Today's webinar is entitled Bridging the Digital Payments Divide. Our panelists will share their unique experiences and insights garnered over many years and across multiple countries in Africa. It is my privilege to introduce the panelists. Firstly, we have Herman Singh, who is CEO of Future Advisory, a digital transformation and startup acceleration firm operating globally. He was previously the Chief Digital Officer of the MTN Group, where he was also Deputy Chairman of Jumia, Africa's first fintech unicorn, as well as Chairman of MTN's JV insurance business. Herman also sat on the board of various MTN subsidiaries in Africa, and he was previously the digital executive for Vodacom and also held similar director level positions at Standard Bank. Welcome, Herman. Our next panelist is Gabriel Swanepoe. He is the Vice President of Business Integration at Mastercard Southern Africa. He is responsible for all aspects of innovation and product development, from project inception to commercialization. Gabriel has been involved in new business development and innovation initiatives within the payment industry for the past 15 years. Prior to joining Mastercard, Gabriel was the new business and innovation manager for Verifone Africa, where he oversaw all new product and business development initiatives. Welcome, Gabriel. Our third panelist is Mohammed Hassem. Mo is founding partner of Hassem Prag, a boutique consultancy which provides a holistic framework to assist in the acceleration of customers' digital journeys. Mo is also Chief Operating Officer of Bank Zero, a modern app-driven bank that is set to disrupt the South African banking and payments landscape. He was previously CIO of First National Bank South Africa and First Rand Bank India. Welcome, Mo. Our last panelist is Hassen Sheik, one of the founders and Chief Executive Officer of eCentric Payment Systems. Hassen has been active in payments for over 25 years. eCentric is a payment switching and retail value-added services provider with a customer portfolio comprising Tier 1 banks and retailers. It processes transactions for a majority of Tier 1 retailers and small and specialized retail outlets. The product and service offerings include card processing, value-added services, remittances, and reconciliation. Welcome, Hassen. So, gentlemen, thank you. I'm going to start the first question, Herman, to you. So according to numerous published statistics, cash is still the payment instrument of choice across most African markets. What, in your view, are the major barriers to digital payments adoption, and how can these be overcome?
Sure, thanks, Rishi, and hello to the audience. I mean, fundamentally, the issue really is one of trust and habit. In countries like South Africa, for example, where electronic payment infrastructure has been around for decades, we're very comfortable to make use of ATMs and point of sales and cards and EFTs. Many of these are not available in many of the countries, certainly that I've been involved in, which is why mobile money has worked so well. So the one issue is trust. We don't trust the technology. And obviously the other issue is behavior. You need to solve a real problem. The challenge that you have in many African countries, of course, and in South Africa as well, by the way, is the perverse incentives linked to cash. You see, because cash has a number of attractions, one of which is cash is anonymous and cash is untraceable. And importantly, cash is not taxed. And so the combination of these creates a real reason to have a cash-based system. So one has to solve that problem first. So it's really an issue of perverse incentives. And also the fact is cash is free, right? There's no real cost to issuing cash, accepting cash, and many countries in Africa, for example, don't have a cash deposit fee if you take cash in to go and deposit it. So really the challenge for electronic payments systems is you actually up against a system that's almost free, with the perverse incentives, and there's a lot of trust. And of course, finally, one of the big challenges is many people have not had access to electronic payment systems in the past, but that's rapidly getting fixed as we roll out things like mobile money, for example.
Thank you, Herman. I think over the past year, the global pandemic has really helped shape transacting behaviors in favor of remote payments. How has this changed the face of digital commerce in the past 12 months, and which payment verticals are likely to register a strong growth? I think let's take some comments first from Gabriel. Gabriel, in your experience at Mastercard over the past 12 months, what have you seen in this perspective?
Yeah, I think, I think the reality of the situation in not just South Africa, but across sub-Saharan Africa at the moment is that the consumer's behavior is changing, and the consumer behavior had to change at the back of, various lockdowns that we saw across the markets over the last 12 months. And so, people that didn't necessarily exercise explicit choice to transact within remote environments were forced to do so, to just avail basic services and goods. And so from a payments perspective, the two big areas of impact has been around the form factor, right? So the way that consumers engage at the point of interaction, most notably contactless payments. So not necessarily wanting to touch, a point of sale device when transacting, and being much more comfortable to tap a card, for example. And I think the second example is within the e-commerce space, with the remote ordering of goods and guest checkout. And so, the interesting thing was just around the different categories that stood out in the way that people transacted. So, for example, more than 90% of Nigerian consumers said they had purchased data top-ups online. While 64% of consumers in Nigeria shopped online for the first time. And it's interesting to see some categories being, showing a rise in transaction volumes, which traditionally didn't necessarily attract high volumes from an e-commerce perspective, notably things like beauty products, gift, books, and groceries. And then maybe the last point to make is that within South Africa, we've had 75% of respondents of a recent survey that we did said that they now prefer contactless payments due to the safety and the hygienic concerns. So I think that we've seen a lot of changes that has transpired over the last 12 months, and some of these from a consumer perspective are here to stay. And I think ultimately there's going to be some sort of an equilibrium to pan out, people wanting to still go back to their main street and interact in a way that they did pre-COVID. But I think that at a very fundamental level, we've seen some changes, which is here to stay.
Thank you. Thanks, Gabriel. Hassen, from your perspective, being intimately involved in the retail space, what have you found over the past 12 months?
I think definitely I'd like to echo what Gabriel has been saying, and it's really about the form factor. Consumers want to be able to tap and go. Tap and go at one stage in the early days was a bit of a scare for the consumer. They had the impression in their minds that if they walk around with their card, they can get defrauded. But I think through advertising and education, the people are learning that it's actually a safer way of transacting. Certainly what we're seeing with the retailers that we deal with, tap and go has been rolled out across 90,000 different till points. So it's become easier for consumers to use. Just touching on what Herman said earlier as well about cash, trust is a big thing. No matter what payment tender type you're using, whether it's cash, tap and go, mobile phones, QR codes, the big thing is trust. If you can get the message across to the consumer that they can trust the payment, the point of interaction that they're dealing with, or the platform that they're dealing with, they will use whatever you ask them to use and whatever is available. So trust is very important. Tap and go is very important, and QR codes obviously is taking off in a big way. What we've also seen in the last 12 months is the rise of e-tailing. So your bricks and mortar retailers are doing well, but we definitely see the volumes are down at that level, but they're picking up. They are catching up on the e-tailing side. So e-commerce is taking off hugely. And there are a number of payment types and form factors you can use on e-commerce, and these are being rolled out and being adopted very quickly by the consumers. And for me, what the consumers want is whatever experience they had in a store, they want a seamless experience when they go online as well. So there's got to be consistent. And again, I just want to emphasize that they need to trust who they're interacting with and how they're interacting with them.
That's an interesting point about the seamless experience. And are you seeing something of a more integrated experience now between physical and digital, or is that certainly the intention?
I think that's the intention. I think QR codes at point of sale or on a website is starting to bridge that divide very quickly. Now you've got MasterPass, you've got SnapScan, you've got Zapper. So people are getting used to snapping a QR code and pay online, but also at a physical retailer. So that's becoming more apparent. And the other payment type that people are getting more and more used to is what we call Eft Push. So you're pushing money from your internet banking account, and that also reduces cost for the merchant. And it's a non-repudiated transaction, so it's a cheaper transaction for the merchant to do. But definitely there is a bridging between the physical and the digital at the moment. That's what we're seeing.
Sure. Mo, from your perspective, how are fintechs disrupting the traditional players in the market? And what role are they playing in bridging the digital payments divide?
I think, from my view, if you look in South Africa, right, it's playing a role, but not as big a role as it could play. And I think that's largely because, of the way the payments world is structured in South Africa. We won't see the amount of disruption we would see in there as we'd see perhaps in Europe or any other jurisdiction where payments are, let's say, are less regulated and play a lesser role, or they don't have a body like we have, where the payments are kind of controlled and the entry into the payments world is controlled. So it's very difficult for, I think, in the South African context, for players to enter that market, because they have to become a partner to a correspondent bank. The moment you have that, you have a problem. In that the first thing is the pricing becomes an issue because they get priced out the market. So they're not able to innovate as far as they can. So that is a bit of a breach. So in the South African context, in the near future, I don't think we'll see that much, let's say, disruption from fintechs in the payment space and so on. I think there's been an attempt at it. Some of the aggregators have tried, but they've tried with the banks, and it's not as pervasive as we'd like to see. So, so there is a bit of a barrier there. So largely in a South African context, you're left with the banks trying to innovate in that space. So unlike other jurisdictions where you don't have that, where you look like India, what they've been doing with payments is just incredible. Opening up the remittance world has just turned the whole payments world upside down. If we look at that, the granting of payment-only banking licenses has changed the payment landscape completely within that area. So I think there's a large role for regulators to play in the payment space if they want disruption, and disruption then will come. It'll also be advantageous to customers because it'll drive down the cost, and it'll probably drive down the cost in both the areas for merchants as well as consumers. Also, we'll see a lot more innovation. I think QR codes have been around for a long time. We're seeing the uptake of that. But are there more innovative ways of doing payments, and are there more cheaper ways of doing payments? Right. And we still haven't solved the peer-to-peer issue as well significantly. That's not taken off that much. So I think there's barriers to fintechs. So the extent to which fintechs can actually disrupt any jurisdiction is going to be dependent on the amount of leeway the regulator actually gives fintechs to be able to play in that arena. I'm not saying unregulated, because I think it needs to be regulated, but they're going to have to be able to be innovative in the way they apply that regulation.
Thank you. Thanks, Mo. So, an interesting point, South Africa is largely a card-driven market in terms of digital payments. But Herman, what is the role of physical and virtual card acceptance in digital commerce across African markets, given the prevalence of mobile money and growing QR code acceptance? So do you see card being under threat going forward?
Great question. Thank you. So really, plastic is not something that's heavily used in most of the countries, certainly that I've been involved in. I've worked extensively in Ivory Coast, Ghana, Cameroon, Rwanda, Uganda, Tanzania, etc. And so it's not like you're disrupting card. Card really hasn't been present, to be fair. If you look at what's happening, especially under COVID, firstly, although in South Africa, e-commerce took off in a big way, in the rest of Africa, if you look at Jumia, for example, as you know, I was very close to Jumia. Actually, under COVID conditions, e-commerce fell by 10%. However, what did happen is the Jumia model is heavily based on cash on delivery, right? And in most of Africa, cash on delivery works well. In South Africa, I think we all know cash is toxic. You don't really, even when Uber started accepting cash in South Africa, it was a big problem. But in the rest of Africa, it's not a problem. So cash on delivery worked. However, during COVID, there was a huge swing away from cash on delivery towards prepayment using Jumia Pay. So that was important. So although the total net volume went down, and it went down because of the logistic issues. So what we are seeing in Africa, I think, is that you're seeing a couple of things. The first thing that you're seeing is the e-commerce, the online players, let's call it that, the online players are doing direct integrations. So if you're a telco and you're selling airtime, you're integrating direct payment from a bank. There's no card involved. If you are DSTV, you are integrating the bank directly. Now, it might be that it's linked to your debit card and you key in your debit card details, but you're basically paying, it's a push transaction from the bank directly to DSTV, push transaction directly to the telco. The e-commerce players are similarly building aggregation plays. So what they are doing is they'll say, I'll accept any tender type. I don't want to give a preference. And all e-commerce players all over the world have done that. They've said, we're not going to give a preference. We'll accept any tender type. And so it's really up to customers. And so customers are largely driven by whatever's convenience. And I think we've heard many of the commentators on the panel make that comment. So whatever's the lowest cost payment mechanism and whatever's the most convenient payment mechanism is actually being used. Now, because of the fact that we never saw card really become big, the question is, will card become big? And the real question is, if you look at the net benefit of rolling out point-of-sale infrastructure plus issuing cards plus replacement of cards, is Africa likely to be a card market, or are we going to go to virtual card and virtual wallet quicker? I mean, the evidence on the ground that I've seen is, to a large extent, I look at what happened in Nigeria, for example. Shoprite Checkers rolled out cards and point-of-sale machines, and if you go and look at the total volume of transactions through Shoprite Checkers at Lekki Island, you'll see that most of it's still cash. And those point of sale machines are sitting under the counter. And so the real issue that you've got is, I think, number one, you've got to find a way to make cash less attractive. Number two, you've got to find a way to make plastic more attractive. And number three, you've got to recognize that the mobile money players are not sitting, and maybe later on the panel, I can give you a sense of what the mobile money players are doing that's really, in a sense, threatening plastic.
Great, thanks, Herman. Gabriel, from your perspective, what are you seeing, and what's Mastercard doing to counter this, or to coexist and adapt to what's happening in the rest of Africa?
So thanks, Rishi. I think there's multiple there's multiple lenses through which one needs to view what's transpiring across the continent. So the reality is that mobile money has just done an absolute terrific job, both in terms of scale and from a consumer utility perspective over the last 20 odd years or so. And it was largely driven at the back of a very particular use case. Initially, the use case that drove mobile money was around domestic remittance, domestic person-to-person payment transactions, and the need and the ability to send money home. And I think that what's transpired is that it has been such a great contributor just in terms of getting an electronic store of value into the consumer's hands, that from a broader sub-Saharan African perspective, 43% of adults across the continent now have access to some sort of a store of value, electronic store of value. And this is largely, divided 33% bank account, 21% mobile money, but still very much lower than the total global average that's sitting at about 69%. So what does this mean? It means that ultimately, as technology continues to converge, and as the cost of broadband and the cost of internet connectivity comes down, consumers can exercise more choice. And as consumers exercise more choice, at the back of that comes more utility. So the use cases that consumers are able to avail are becoming more robust. So Herman's absolutely right. In the way that mobile money is evolving now, it is typically looking at integrations that goes beyond the traditional domestic person-to-person transaction, to look at use cases like bill payment, for example, and to look at use cases like e-commerce. And so at the back of that, the role that Mastercard is playing is to say, and to recognize that we need to think about how do we open up utility from a consumer perspective. And in order to open up that utility, there's obviously the broader international franchise. So what that means for us then is that very recently, in February this year, we announced a strategic partnership with MTN, for example, that will enable millions of the MTN mobile money customers to be able to avail the international franchise and make payments for, in environments like Amazon, for example. And we've similarly done a deal with Airtel in Africa. And so I think the way to view this is to say that to Herman's point, there are many communities across the continent that are signed up for mobile money, and they are using that for very bespoke, specific purposes. But as the need of the utility and the need from the consumer evolves, so that will open up. And the role that we hope to play is to be an enabler, and not just be an enabler in terms of opening up the international franchise, but also looking at introducing additional form factors to get away from the prohibitive cost of deploying traditional point of sale, and embracing lower cost technologies like QR, for example. And then also looking at opening up different types of transaction forms. So, whether I'm making a payment to Amazon online, or whether I would like to do a cross-border remittance to, somebody that sits elsewhere in the world, it's that capability and enablement that we are hoping to provide.
Thank you. Thanks, Gabriel. Mo, just linked on to that question as well. We're seeing a lot of interest use cases and applications of virtual cards. How do you see that playing out in South Africa? Where there's still a large prevalence of physical plastic.
Yeah. So I think we've been monitoring the market quite closely to find out if it's worthwhile actually going into the virtual card market. In the South African sense, it hasn't taken off. And I think it's largely because we don't have the compatibilities that we have like in other countries like Japan and in those countries where you can load cards on, and they're pervasively used everywhere with NFC. So So I think the other thing in South Africa, what we noticed was that people actually want a physical card. So it's kind of like something that says I've got something physical in my wallet that represents some sort of value or an association with some value. Whether there's money or not, I think is irrelevant. It's just the card and what it represents. And I think in countries or in places where cards have been around for a long time, so if you look at South Africa, it's like one of the first places where actually plastics arrived, with the Barclay card a very long time ago. So we're very mature in terms of card ownership, and people are used to getting cards in their wallets. So not seeing a physical card is actually, I think, problematic in countries that are mature with card holders. I think also people are also reluctant with getting a mobile phone that has a virtual card in it, because of the security issues. And we look at some of the security breaches that have happened. Those pose a number of concerns for in more developed countries. I think in countries where there are no cards available, or where card adoption is very low, mobile cards will become very prevalent. Just like mobile money has become prevalent in those areas where banking is not mature enough, I think the mobile virtual cards will become very prevalent in those areas. People are already seeing the cell phone as a means of transacting and moving money around. So virtual card is just another mechanism for them to do that. So in those countries, I see a big adoption in virtual cards. In South Africa, it's kind of wait and see. A few banks have introduced them, so it's kind of wait and see to see what the adoption will be like. I think there's other mechanisms, for example, like QR Pay and send money, and those kind of mechanisms, which achieve more or less the same thing. So maybe virtual cards in our area in South Africa were a bit too late, and people, so those are some of the things I think is going to happen. Yeah.
Thank you. Thanks, Mo. Hassen, just also continuing on that note, the South African retail space is dominated by cash and POS payments. Now, how do you see this playing out over the next few years? And do you think traditional POS transactions are destined to decline?
That's a very good question. That's a very good question. I think Mo actually said it a little bit earlier as well. The South African market is actually very mature, very mature. We sit in our ways. We love to have a card in our hand or in our wallet. Tap and go is taking off, QR codes, but all of these things are the underlying infrastructure is really the card rails. Retailers are used to the traditional point of sale. The customers we service have got integrated point of sale, and what we've done is, and I think this is the key difference, is that integrated point of sale solution that we give to the retailer is not just for card or payment acceptance. It's to allow them to do multiple things, to sell airtime, sell electricity, do remittances, pay a bill, do balance inquiries. So there's a number of things attached to the way the traditional point of sale environment works than just for payment. So that's going to be around for a while. But there's definitely a move, and the retailers are questioning more and more how to reduce cost at the point of sale. So your traditional Verifone or Ingenico or PAX device is quite expensive. They're saying, why not move to a cell phone or Android device to drive down costs and make that device more versatile in the store? So definitely there's a lot of questions coming around to say that how can we reduce cost, but keep the versatility of a point of sale device in the store. And again, the other trend that's happening more and more is what they call omni-channel or omni experience. So whatever the customer experiences in store, they want to experience online or virtually or mobile or wherever they are going. Again, guys, it's about ubiquity. It's not about a card or a mobile wallet or whatever. It's about ubiquity. If the customer's got a store value, whether the store value is attached to a card or a app on a phone, etc., if that consumer cannot use that to buy goods or get cash or give cash, it's actually completely useless. So retailers are recognizing that they are enriching their point of sale environment to be not just card accepting, but to be service oriented, so they can give the consumer whatever they need. The big thing for retailers, they never want the consumer to walk away because they can't pay, or they can't use their card, or they can't use their whatever mechanism they've got. So that's the focus. And then the user experience is key. If the user experience is bad, that form factor or that tender type will die very, very quickly. And we've seen it.
Thanks, Hassen. Herman, linked to that, one of your opening remarks was around acceptance of digital payments. How do you see, things like soft POS and QR code succeeding in the rest of Africa? A link to that, where Africa is plagued by infrastructure issues such as unreliable and limited electricity supply, poor mobile network coverage, low broadband internet penetration, etc. From your experience in the space, so what initiatives are underway to address these?
So the way to think about, I guess, any market, and it's not specific to Africa, if you look at India, it's very similar, is there's different kinds of commerce. So the one kind of commerce, I guess, is physical face-to-face. So I'm physically in front of you and I'm buying something physical from you. The next kind of commerce might be, we're not in the same place. I'm buying something physical from you, but I'm remote from you. The third kind of business is I'm buying something virtual from you and I'm physically in front of you. So I'm buying airtime from you, for example, or I'm doing a bill payment. Or it might be I'm buying something virtual from you and we're physically not in the same space. So anything where it's something virtual and we physically don't have to be next to each other. So it's remote and it's not synchronous. In other words, we don't simultaneously have to be at the same place. That kind of stuff has gone quickly towards what I call embedded payments, right? So in other words, the person who's selling the service embeds the payment solution into their offering. So the bill payment folks, the utility folks, all the prepayment stuff, airtime, etc. All of that stuff has got payments embedded in it, and the service is delivered remotely. Where you've got physical payment face to face, but the thing you're selling is virtual. So you're selling airtime and bill payment and DST subscriptions. Those are quickly moving away from physical because of the high cost. Scratch cards have been eliminated in most African countries for exactly that reason. And you've converted the service that was a physical thing into a virtual thing. The minute you can convert the service itself into something that can be executed, for example, Netflix, I can deliver it virtually, Spotify can deliver it virtually, that's the preferred option. The final point is, what do we do when it's something physical, but we are not in the same place? Now that's e-commerce. And again, I agree totally with the point that all the panelists have made, which is, the retailers don't want to dictate to the customer what, and I like the word that was used, form factor, what form factor to use. It's up to the customer, right? They'll figure it out. And the fintechs are all playing, the banks are playing to figure out, Mastercard, Visa are playing to try to figure out what form factor works the best. The retailers don't want to play that game. They've all tried, they've all gotten burnt. If you look at Jumia Pay, for example, it's really a very small portion of the total Jumia business. They've launched Jumia Pay, but to be honest, it's really more like UPay. It's an aggregation play. It's not like either Jumia Wallet, but the Jumia Wallet is not the thing that's doing it. So the retailers are sitting back going, whatever you bring, I'll accept. And exactly to the point that Hassen meant, which leaves you with the final play, which is, so for remote e-commerce, right, where you're delivering a physical thing, the retailers are all going aggregation. I'll aggregate whatever you arrive with, which leaves you with, well, what do I do for physical face-to-face, right? And also for e-commerce where the customer doesn't have a digital payment system. And here is where the challenge is. So largely it's either cash on delivery, as I've indicated to you, which is still huge. It's enormous, which creates a massive cash up problem for all the e-tailers afterwards. At the end of the day, all the drivers are coming back having done their deliveries, and now you've got a cash up. Now you've got losses to deal with, and that problem is still a massive problem for trade where it's not face-to-face, it's remote, but it's a physical thing that has to be delivered. So, for example, food delivery is a very good example, which, by the way, is one of the e-commerce sectors that did grow during the pandemic. And so we come to our opening point, which is what do we do with, with POS and ePOS and MPOS, etc. And my sense is that in Africa in particular, if we can avoid the cost of a proprietary point of sale machine, that's the way we're going to want to go. So whether it's a P2P push through mobile money, and I agree with the comments made, it's a very clunky thing, because you've got to log in, I've got to log in, I've got to load your merchant number, I've got to push you money. It's a horrible experience. So the form factor, to use the term, of really QR codes is excellent, because the minute you can use a QR code, it immediately pre-populates value, it pre-populates merchant number, and all you got to do is authenticate. My sense is we're going to move towards Android-based QR code type systems. That's where I see it going. And I think this issue of proximity payments, I'm not sure we're ready for it yet. NFC is not heavily rolled out, and to roll out NFC cards is going to be a problem. Then you need an NFC phone. I don't see proximity type payments really rolling out in Africa. I see QR codes very similar to China with 10Pay and WhatsApp, WeChat Pay being the model I think that we're going to go for.
Thank you. Thanks, Herman. Which also brings up an interesting point. And Gabriel, we see that interoperability of payments remains a challenge, especially in the rest of the continent. So each payment system functions as an island. This has resulted in a complex acceptance landscape where merchants have no choice but to accept a number of proprietary payment methods. So different mobile money players, QR codes that are not interoperable, multiple POS terminals from different banks, and all that comes with different fees and different settlement times, and it makes reconciliation a nightmare. So, what steps do regulators need to take to create the necessary infrastructure and policies to encourage digital payments?
Yeah, so I think the first thing, and it's almost implied in the way that you positioned it there, is that to a large extent there needs to be a recognition that there are different types of stores of value on the continent as a departure point. And to that end, then the utility of that is really determined by the type of transaction that we're doing, whether it's within the bricks and mortar space, whether it's e-commerce or the like. And then thirdly, I think that also important is to understand what are the rules of engagement around which these different entities need to engage. I think that it's clear if you just look at the traditional growth of card and you look at how scale was achieved from a legacy 4-party model versus 3-party model point of view, that just in terms of scale, the 4-party model won hands down. And so if you look at the way that mobile money has grown and scaled across Africa, but you also take into consideration that there are banks and other financial institutions that play a role in expanding acceptance on the continent, then it's almost back to a conversation around what are the rules and the form factor around which interoperability can be achieved. So if we then look at it, I mean, today we have enabled just over 100 million consumers, and I think it's around 1.5 million merchants on QR across the continent. And if you look at the way that Mastercard QR has been deployed, there is a standard that's at the back of this, right? There's an EMVCo standard that regulates this. And one of the tenets around this is that we shouldn't be prescriptive in what is the underlying store of value that will enable you to facilitate that type of payment. That's number one. And secondly, I think it's important to recognize that for the communities where proprietary QRs or closed loop QRs were deployed, that was fit for purpose and it was deployed for a very particular use case. And so it's an understanding that we need to, the deployment of those communities and the way that QR was positioned in that space need to remain sacrosanct. But it also needs to be able to provide the means to open that up to different types of store of value should it be required, and opening it up to a broader community. So if I'm traveling from Zambia to Zimbabwe, for example, or I'm going to Tanzania, I need to be able to still use my preferred store of value, whether it's a wallet on my phone, whether it's a VCN that is loaded, whether it's whatever it is, and I need to be able to scan that code and I need to be able to transact. And I think at the back of that, we've got many examples across the continent where some of these initiatives are underway. Tanzania is a great example where QR have been deployed. We have spearheaded and invested in some initiatives like COPA, for example, where 250,000 merchants became financially empowered through the deployment of QR. And I think that ultimately what we need to recognize is that we need to honor consumers' choice, so the ability to introduce as little friction as possible to the consumer. Secondly, we have to recognize that traditional point of sale did not reach, especially from a financial inclusion point of view, the bottom of the pyramid, and perhaps QR is something that can get there. And then lastly, from a regulation point of view, it needs to we should allow innovation to flourish, and the regulations should follow whatever innovations are deployed. That is, that provides those proof points that one, solve for consumer utility, but also make sure that as broad a network as possible of merchants are enabled, through electronic means. And I think that's really the departure point for interoperability. Yeah.
Thanks, Gabriel. Hassen, just linked on to that. So we've seen a pervasive number of different QR code players in the market, and in South Africa there's been some players that have been hesitant to coexist in an interoperable manner, and I think the fees and the commercials around it has largely driven this behavior. What's your experience been, and again, what role does a regulator have to play to sort of level the playing field?
Was it directed at me, Rishi?
Yes, yeah.
There's two Hassens on the panel.
There's a Hassem and a Hassen.
Yeah, I think QR codes. Obviously, you've got MasterPass, you've got SnapScan, you've got Zapper. Each of them run basically on the card rails at the end of the day. And like I said before, it's about ease of use. So the user experience is very, very important to the customer. So where QR codes work very well is where in a non-contact environment, you go to flea markets, organic farms, whatever, and you quickly, or a coffee shop you want to buy, you scan on your phone and you pay. It runs on the card rails, authorizes your transaction, you show it into the merchant, or he gets an SMS or a message, and it's done. What retailers are trying to do, obviously, is they're trying to merge that experience onto the physical point of sale environment. Now, the challenge that they've got there is that if you look at the way a traditional point of sale environment works, it's the cashier rings up the sale, it talks to the PIN pad sends a message to the switch, onto the acquiring bank, etc., all the way back again. With the advent of QR codes, you've got now two streams happening at the same time. You've got the point of sale doing what it's doing in the traditional manner, and then you've got something happening over the phone, which is out of band. So the ability to bring these two things together is the challenge, if I can put it that way. Because again, it comes down to user experience. And I think the moment we can get the experience to be slick and easy to use at point of sale, you'll get QR codes prevailing all over the place. In terms of legislation, I think at the moment all of those things run on the card rails, so they're dictated by PCI and what the SARB and the National Payment System dictate. So there's no real issues there. But if you want to expand it in terms of adding more tender types into the QR code platform, then obviously you'd have to look a bit further in terms of what it means for the national payment systems and what it means from a settlement and a recon point of view. And I think that's the big challenge for the retailers. It's one thing for the customer coming in and doing the transaction and it happening seamlessly, but then how do you reconcile and how do you make sure settlement happens timeously and you're not out of pocket? So those things also have to be tied up, and that's where legislation regulation comes in terms of who's sitting on the funds and who's settling who in what time frame. So that becomes very important.
Thanks, Hassen. Mo, from your perspective, having worked in a market like India as well, where there's a lot of intervention from a regulatory perspective, what's your experience been? And again, to that point, what can regulators do to level the playing field, but not to stifle innovation?
I think that's a good question, and it all depends on the environment that the regulator finds itself. If you look at in the South African context, the failure of places like VBS Bank doesn't help us at all. It just throws a spanner in the works, because then regulators tend to tighten up because they see that people are unable, or banks are unable to meet their commitments to their depositors. And we have to understand regulators are there to protect depositors, and to protect the money that they invest or put into banks. So I think that becomes difficult. I think if we are working with the South African regulator, they're quite open to innovation if we can show that it will protect the customer and it will provide benefits to the customer. The biggest barrier still, and I think it's kind of the things we're working on at the bank that I'm working at now, is driving the cost down, because each of these innovations, while we think they bring advantages, they actually bring a big price tag with them for consumers. So adoption movement in that area is very low. I think also if you're a bank and you've invested a lot of money in a particular rail or a particular mechanism, your ability to, or your need to move out of it is stifled by the fact that you've got this big investment that you're going to potentially use. So to drive the regulator, to drive innovation with the regulator to modify that, I think moves away. Is not there really. If you look at the Indian context, the regulator there is very, very open to innovations and to solving the problems that India has. If you look at remittances moving just from one province to another, and if you consider that the province is actually probably from here to Cape Town, we don't have those kind of money or remittance problems within South Africa. But I think largely, they've been very, very innovative in opening up their payments. Let's say first the remittance leg and then the payments leg as well. So, dealing with those two big issues within the Indian space has driven a lot of innovation. I think the South African regulator is open to innovation. So, there are talks on innovative ways of doing things. What banks haven't demonstrated in South Africa is the way they can achieve it that will be of real benefit to them. There's been a reluctance to engage the regulator. It also depends on how banks see the regulator, and do they see the regulator as a friendly person, or the bank's friend or not, or do they perceive them as someone who's going to stifle innovation? I don't think any regulator is there to stifle innovation. It wants innovation in a way that can assure depositors of value. Right, whether it's to protect their money or value in terms of delivering a service and value for money service. So I think that's where it is. So I think it's also up to us to as players in the field to go to regulators and to say, how do we innovate and how can we change the regulation to accommodate the innovation, and what guarantees can we provide within the controls that we put in to provide that assurance to the regulator. If you look at for example, players like HelloPesa have managed to get to the regulator to do international remittances. I mean, that's a big step forward. If you just think about, it doesn't look like a big step forward, but it is. It's a non-bank player playing in the payment in a cross-border remittance space. So that's big. That's big. If you think about it, and you just think that we have the exchange control. So I think where people are prepared to chat to the regulator and play, there, we're going to see much more movement in that direction as we move forward in time. So I think the regulators play a critical role. We cannot afford another VBS, for example, and I think they do play a very important role. But I think we do need to engage them more to drive the innovation in regulation as well. They will not move in regulation if nobody approaches them with innovation to say, how do we innovate in the regulatory space?
Thanks, Mo. Herman, we have a question from one of the audience members regarding KYC processes, especially in countries across the continent where there's no national ID database or no biometric store. From your experience, how have you seen, especially MNOs, manage this? We know MTN was subject to fines in Nigeria, for example. What is the solution to managing the KYC issue?
So I think one's going to create a little bit of context around this, right? Clearly, what happens in the telco space and what happens in banks is quite different. The risk associated with giving somebody a SIM card, which a person may only use for the average ARPU, for example, is $4 a month at MTN. That's the average ARPU. right? So if you think about it, this is not a huge risk. It's $4. Whereas a bank account or any store of value will have substantially more of that. If you think about the expenditure by any person in Africa on connectivity and communication as a percentage of GDP, it's around 3, 4, 5%. So the risk associated with communication is much lower from a financial point of view. Let's start there. And therefore, the burden of proof should be a lot lower for telcos because we'll be dealing with much smaller sums of money. And when I say we, I mean the telcos. Banks, in theory, have a bigger, anyone who's moving payments has a bigger, should have a bigger burden of proof around identity because of fraud and because of money laundering and countering terrorism, etc. The challenge, I guess, in Africa is that one, there are, for example, terrorists that have made use of SIM cards. And because of that, to trigger bombs, for example, governments have become quite harsh, number one. Number two, governments are also very heavily threatened in terms of raising revenue. And so if you go and look at the timing around many of those fines, you'll see many of those fines are linked around fiscal deficits that governments have had. So the problem that you've had, if you go and look at fines applied around the world to telcos, you find 80% of the fines have occurred in Africa, and they've all occurred in Africa in the last couple of years when there've been fiscal deficits. So we must be very clear that there's a big focus around why these fines are coming, and it has very little to do with mitigating risk, right? And it has a lot more to do with actually raising funds for the fiscus. Now, that doesn't remove the fact that telcos should have to have rules around things like RICA to ensure that you confirm identity. Now, the challenge, of course, in Africa, as the question is quite rightly posed, many countries don't have identity. Take Uganda, for example. At Uganda, the telcos are legally allowed to accept 13 different forms of identity. 13, right? And it might be a birth certificate issued by multiple authorities. Sometimes people are born in rural areas. They don't get a birth certificate, right? And so the only time that they can prove they're required to prove their identity when they want a SIM card or a bank account, well, they never received a birth certificate because they were born, miles away from Kinshasa or Nairobi. And so what happens there is you get a letter from your tribal chief to say you were born, because there's no way to prove that you exist, right? You were born in a rural area. Technically, you don't exist, right? And so you get a letter from your tribal chief. Well, that's acceptable as a form of identity for RICA purposes, right? And we've got 13 of those. Some of them might be refugee status. Some of them might be passport. Remember, there's a huge amount of cross-border movement between Uganda, Kenya, and Tanzania, for example, in East Africa. 15% of people living in Cameroon are actually Nigerian, right? And so you've got to accept Nigerian documents in Cameroon as an example. And so when you kind of look at that, the telcos have figured out a way to basically do RICA using all of these documents. Of course, that still leaves people who have nothing, right? And there are various ways in which you're going to have a very manual process of proving that you exist, because that's really what the problem is. How do you prove that I exist? To a large extent, what telcos have done is they've rolled out devices to the airtime merchants to allow them to do the RICA for them, right? And in many cases, it's possible to do a self-RICA. So you take a photograph of yourself, you take a photograph of your document, and then there's a huge amount of artificial intelligence in the background to prove that you're alive. So you've got to move your head, and and then we can see that it's a real person, and and then you're able to, in a sense, get proof of life, right? Because you need proof of life, you need proof of identity, you need proof it's not fraud, and then you'll issue the SIM card. Now, I would argue that's actually quite sophisticated for what is basically $4 a month, right? A SIM card of $4 a month. So I think there's a lot that banks can learn from the way that telcos have rolled that out, right? Now here's the challenge for a bank. Telcos do a RICA and then issue a SIM card and then attach a store of value to that SIM card. Now this is where it gets interesting. Suddenly, what's happened is you've got this regulatory arbitrage here, where I'm issuing a SIM card, but then I'm attaching a bank account to it, and I've already RICA'd you, so in theory I don't need to FICA you because I've already RICA'd you, and suddenly you've got a financial instrument which has 20 times more risk attached to it, but you applied the telco rules. So over time, I do feel that banks are going to have to make use of agent banking services, where you allow the agent to do the FICA for you, right? And you're going to have to allow much smarter ways of FICing yourself. You have to basically allow people to go in, take photographs of stuff, and then give them an account. And I think you're going to have to recognize that RICA and FICA by design are exclusionary. They exclude people who don't have those documents. And if what you want is inclusion, either for telco services or for banking, you're going to have to find a way to lower the barrier, number one, in line with the risk, right? How much of risk is there actually in giving someone a mobile money wallet that only holds $50, right? And how much of risk is there to giving somebody a SIM card that can only process, is only going to process $4? And shouldn't you have a tiered system where you say, look, you seem to be hitting the breach now. I'm going to need you to come in, and we're going to have to take your fingerprint. So my view is that in the longer term, we're going to have a very low level of regulatory compliance in terms of low risk transactions, whether it's banking or telco. And then as you start to make greater use of it, we'll gradually increase the level of authentication. I think that's got to be the way that we go in Africa. Otherwise, it's just hugely discriminatory to the poor.
Absolutely. And I guess banks may also argue that it's discriminatory to them because they have, at the moment, they have a much larger burden of regulation.
Exactly.
So, Gabriel, following on from that, or continuing the theme of security, with the adoption of various digital channels, what are some of the important considerations for managing emerging cybersecurity threats and other types of risk?
Yeah, look, I mean, I think that it's a great question. And I think it's a topic that's continuing to evolve. And in many ways, I think it ties into a little bit what Herman's talking about, right? Because what we're really talking about there is digital identity. So, as the ubiquity of digital convergence continues to expand, and we are dependent upon digital systems to not just, prove our existence, but also be able to trade and to transact. How does this evolve as data becomes more available across different platforms? And, if you look at what's happened in Europe with the rise of open banking in terms of PSD2 and where that's going, and we think about the complexity of creating the different environments where entities need to share data in order for consumers to be able to transact and enable to prove identity, this becomes more profound. And as things become online and the capability around artificial intelligence and machine learning evolves, creating the integrity behind these systems is absolutely fundamental. And so I think, there's probably four things to bear in mind. The first one is protection. So how do we protect our data assets, and how do we quantify the cyber risks as these systems evolve? So that's question number one. Secondly is the prioritization around cybersecurity initiatives based on a risk and return collaboration. And I think Herman touched on it a little bit. It's saying, look, in order for me to transact, I need to provide proof of life, and I need to prove that I exist. And at the back of that, I might be able to do certain things, or there's a certain amount of utility that is afforded me. And as this becomes more sophisticated, and I need to transact across different types of environments and ecosystems, how do I provide the data that would allow me to do so? But more importantly, how do I ensure that there's integrity behind that data, and from a security perspective, it's protected? So that's the second thing. Thirdly, in practice, what happens when things go wrong, and how do we hold each other accountable across different environments? And again, pointing to where open banking is going and how it's evolving, we've seen screen scraping, for example, being used to provide personal financial management in some companies across the continent, where I supply my login details for internet banking, and at the back of that, I engage with a third party that then makes available certain services that helps me to do personal financial management. But what happens from a macro market perspective if those types of environments get compromised? And how do we ensure that once that does happen, that the consumers or the individuals that's been compromised are protected, and how do we move ahead? And the strategies around that, I think, is going to become much more important in the years to come. And then lastly is prevention, right? So it's understanding that the entities that operate within our industry and that are involved with not just the capturing of data, but the management and the handling of data, is trained sufficiently that we know that the entities that operate within the space is almost to a certain extent the first line of defense. So ensuring that we don't get unsolicited SIM swaps within the telco environment, ensuring that we understand what is the framework around allowing third parties access to data from a regulatory perspective, thinking through the types of entities and the regulation that needs to be in place for third parties to access sensitive data, be it, and it doesn't necessarily have to be financial, right? I don't think that we live in a vacuum. I think this transcends just the payment space into health, into other social types of environments. And I think, so in a nutshell, I think it's protect, prioritize, practice, and prevent.
Thank you. Thanks, Gabriel. Mo, I think this question is close to your heart. So Africa, and Southern Africa especially, has some of the most expensive remittance corridors, and there's more and more regional groupings, and there's a greater push for intra-continental trade. And so the signing of the Continental Free Trade Area, for example, by 44 countries in 2018 is supposed to boost intra-African trade. Even the African Union's agenda calls for increased intra-African trade from the current 16% to over 25% by 2025. So how do you see this evolving, and what role does digitization and digital payments have to play in enabling this?
So I think here the big issue has always been the interoperability of banks and our ability to move money across effectively. And I know there's Swift gateways and so on, but that's really not been as easy as we'd like to. And also the regulation around cross-border payments has been quite heavily. So while we have all these agreements signed, when the rubber hits the road, it's different. There's different things happening as the rubber hits the road. So things like the real big issue, the big issue here is moving money with trust across to the other areas, and then saying which of those areas can be trusted. So a centralized clearing of some sort. They started with the SADC regions to try and get money movement easily through, but that hasn't grown. There's been talk about it, but we haven't seen anything on the ground yet as far as those kind of initiatives go. But I think those will be critical things that need to come into play so that we can move money across without going through all the regulatory hurdles we have to go through now to get the money across to the other side to promote trade. So so while the agreements are all there, the infrastructure to support it is not there. We don't see it yet in play. There's been a lot of talk, and when I was involved with at the other big bank I was involved in, there was a lot of work going on around it to try and get it up and going, but it hasn't materialized. So so that I believe is one of the bigger things, is can we put infrastructure in place that can allow the exchange of electronic information outside of the typical ones that are restricted to banks, because that's what's going to open the trade up. At the moment it's through banks, and there's a lot of hurdles to go through with paperwork, etc., going through that's required. So just as we've done with the remittances across banks, where banks used retailers to remit cross-border using traditional rails or their own internal rails to get money across border. We actually need let's say a regional switch to be able to move money across. That'll play a role not only in the individual space but also in the commercial space. To be able to move that kind of money across. Today, the only way you can do is through banks, and once you do that, then there's all sorts of issues that come into play. There's regulatory issues from a banking perspective, etc. So the first step is to actually build a regional switch to move money. That's the first thing. Once you've got that in place, then is deciding which is the currency you're going to actually use to do it. Because when you start having currency conversions and so on, there's other issues to consider, and there's liquidity issues to consider, and so on. So, you know, so while it looks like a simple issue to solve, it's actually quite a complex issue to solve in terms of moving that kind of money or that level of money across to get free trade going. You know, so the best we can do at the moment is just have agreements, you know, but having a regional switch across those areas is actually what we need, able to move money effectively across. We also then need regulatory convergence from a regulatory perspective when we're moving that money across, in terms of allowing the free trade to happen. If we have differing regulatory environments managing those things, then that just becomes other hurdles that people need to cross, which will dissuade the movement of money or the movement of trade across those areas. So I think that, you know, the first steps have been taken, but not very much more. You know, there's certain agreements there, but not enough has been done to facilitate that, and that's why it remains relatively closed at the moment.
Thanks, Mo. Herman, from your experience in the telco space, what have you seen, you know, telcos do to try and address this issue?
Yeah, so the way I think about this is it's a lot like the horizon. You know, the more you run towards the horizon, the further away the horizon gets. You never get there. We've been talking about this intra-Africa trade thing like a dream for years, and everybody's been pushing it, and it is like the horizon. We've been running towards it. It just never seems to get any closer. And I agree totally with Mo's comment around, you know, regulatory convergence as being a big issue and the role of banks. But I think there are other challenges that we found. One challenge, for example, again, if I go back to my days at Jumia, the vast majority of Jumia's trade, you know, is actually in country. And the original dream was, let's build a pan-African e-commerce giant like Amazon. Let's treat Africa like one country. Let's pick the top 100 cities in Africa. Let's not roll out a country strategy. Let's roll out a city strategy, right? Because that's, you know, if you take the top 100 cities in Africa, that's 75% of GDP. Just do the top 100 cities. You can't do e-commerce in rural areas. So stop thinking country, start thinking city. Now, logically, that's the way the big e-commerce giants have all played. And why? Well, because the minute you go city-based strategy, you've got connectivity because everybody's got connectivity in a city. The logistics is easy. One warehouse per city, you know, easy to work from depots, move things out. You know, cash is easy to handle if you've got it, etc. Now you come and look at the practicality of rolling out that strategy. And, you know, even at Jumia, we've shut down countries, right? You know, we exited from Rwanda, we exited from Ethiopia, we exited from Cameroon. And there were many reasons for this. One reason was just logistics is really horrific, right? You know, if you think about how long it takes to drive from Lagos to Abuja, that can be an all-day trip, right? It's 400 kilometers. Now, in countries with good highways, you know, that's a 3-hour drive, right? Maybe a 4-hour drive, but, you know, it's an all-day trip. And so the problem is if somebody in Abuja orders a fridge and you got to ship it from Lagos, this is in country. It's almost impossible to do a same-day delivery. Now you get to cross the country. And you saw what happened at Byte Bridge, right, which is the South African border post to Zimbabwe. So now you've got customs as an issue, you've got border posts as an issue. And so if the thing you're selling is a physical thing, it's very difficult. So you could argue, well, why don't we just do services cross-border? I mean, I've delivered services cross-border. The hardest thing is getting paid. It's not because people don't want to pay you, it's because they can't pay you. And eventually I've had to resort to PayPal to get paid, which is actually ludicrous, right? To use something that's a consumer-based service that's run out of America to get paid between 2 African countries. So settlement's an issue. Credit is definitely an issue. If you're going to ship, you need bills of lading, and I need proof that you're going to pay. You got to put your money to escrow. I put my money, my goods onto a ship. I give you bill of lading. You then pay me, etc. Very tricky. The issue of forex, exactly as Mo said, you know, you've got countries that are very volatile. So I ship my goods. What price am I going to be paid at, or are we all going to use the border? So the fact of the matter is, telcos have tried to solve this. The one thing that telcos have done, I don't know if you're aware of this, but Orange and MTN got together and they're connecting their mobile wallets through a switch. And so that agreement was signed way back. I was still there, so it was 2018. We kicked the project off. And so, you know, so they're going to create a pan-African switch between mobile wallets. They're going to allow you to move money between mobile wallets. That also is not ideal, because if you want to use that for commerce, right? It's tricky. It's tricky because you can't really put large sums of money into a mobile wallet. But that's one attempt, and we've tried to. I mean, at the time at MTN, we tried to get Vodacom to join as well with M-Pesa. And if you think about it, if Orange Money, Airtel Cash, and MTN Mobile Money and M-Pesa connect across Africa, in theory, you've got you're probably going to end up, I would guess, 500-600 million wallets connected to each other through a switch. The problem is who's going to own the switch? How are you going to run the switch? Telcos are not great operators for the switch. And should they operate the switch? Because do you only want mobile wallets connected, or do you want everyone connected? Because really, to the points that have been made on the panel, you got to go open. You can't keep this thing restricted to wallets only. You really want to open it up and bring in a payment operator to run this thing, as a neutral utility for everyone. And so we have tried to do that. But I'll tell you, I mean, just to show you how complex this is, when we rolled out Jumia, one of the things we did was to recognize that actually Chinese players are huge. So to increase the number of merchants on the Jumia platform, we opened up the Jumia platform to Chinese traders. And we then had to create a payment mechanism for traders. So this is a B2B play, small b to small b, right? So small traders in Nigeria wanted to top up their stock. We allowed them to top up their stock through Jumia. Well, by the way, this business, Jumia Connect, I think it was, ended up becoming 20% of our total business, right? Allowing people in Africa to top up their stock. The problem is, how do you now make payments from Nigeria to China and vice versa? And then eventually we opened it up and said, well, why would you only restrict that to traders? Why don't you open it up to consumers? Let consumers shop from China. Because the question you got to ask is, what exactly are people buying from each other? Exactly in China. What are they? I mean, in Africa, what are they buying? Right? Very important question, because there are no factories realistically in Africa. Very few factories. So what are we trading really? We've mainly got commodities. So these are raw materials that haven't been processed. We ship them to China to get processed in China. So actually what you want is, do you understand the problem here? The real problem is we need factories in Africa so we can trade manufactured goods with each other. Otherwise, what we need is a better way to trade with China, because all the factories are there. So if you really want to drive trade in Africa, I think the place to start is really, we need to start getting more manufacturing done. You see this, by the way, at Jumia. The minute we had the oil crunch in 2016 and the COVID crunch in 2020, there's no foreign currency, right? Because oil prices crashed and the prices double. Now you got a real problem, right? You can't pay for imported goods. You need to get local goods, but there's no local factories. So this whole issue of local manufacturing is very powerful in terms of the payment stream.
Thanks, Herman. Yeah, absolutely. I mean, some of these fundamental challenges that you don't experience in other markets across the world. We've got a question from Esther Sendeza. I'm just trying to read it off this chat box. It's regarding okay, sorry, 1 second, guys. Okay, so what are some of the challenges in getting mass user acceptance in terms of payment mechanisms like Mastercard QR code? Gabriel, maybe you can start, and then maybe Hassen can jump in.
Sure. So, QR codes, like any other form factor, is a function of two sides of a platform. We've talked extensively around how do we think about things like interoperability and how do we think about different stores of value. And the reality behind it is that the utility to the consumer is basically a function of how robust the acceptance network is that sits behind it. And the bigger the acceptance network is, the bigger the utility you ultimately provide to the consumer. And so the trick around any financial service, especially in Africa, and I'm sure that everybody on the panel will agree with me, is that it's not just a function of deploying the two sides of the platform, which is enabling the consumers from a store of value perspective, and then deploying the acceptance infrastructure. It's then the cultural and behavior angles that tie into it, and then you start dealing with things like trust. You start dealing with the experience side of things, and lastly, you start thinking through the utility itself. So I think that we've made great strides in South Africa. I think particularly in QR, I think SnapScan was first to market, which was back in 2012 or 2013, perhaps it was, with the deployment of QR codes, and immediately certain of the categories jumped to it. And I think Hassen referred to it a little bit earlier. You had markets that embraced it fairly quickly, and those types of environments embraced it. But as QR expanded, you had to create a uniform approach in order to make sure that there's compatibility between the different types of QRs that's deployed in market. And then it became a conversation around the definition of the use cases. And that took 3 to 4 years to do. I mean, we have a conversation today around displaying a QR code on a Verifone device or on an Ingenico device. But the reality is that the e-commerce enablement portion in dealing with the broader aggregation community to get QR position was a 3-year exercise. To get QR positioned within the lower, if you were to imagine enterprises in a pyramid, to get into the informal space or below the formal mom and pop enterprises to get QR positioned over there took some doing, because it wasn't simply just the deployment and the distribution of QR. It was recognizing that those merchants needed to be onboarded. There are certain, regulatory components and administrative processes that needed to occur. And so that onboarding process took time to evolve and become digitized as well. So I think in terms of QR, we are at an inflection point, and we're at an inflection point because of the efforts that's been put into the development of the platform, both from a consumer and an acceptance perspective. And then lastly, the use cases that has built out the utility that makes this useful and convenient to consumers. So I think that ultimately, in scaling any type of payment service, it's not that much driven by the technology anymore, as that it's driven to what problem are you solving and what pain point are you solving to the consumer. And at the back of that, how do you address the cultural and behavioral aspects that's ultimately going to affect, whether a consumer ends up utilizing the service or not. Yeah.
Thank you. Thanks, Gabriel. Hassen, from your perspective, what can be done to drive mass consumer adoption of these methods?
Again, I think what Gabriel actually summarized it beautifully. It's not about the form factor. It's what problem are you solving for the consumer? At the end of the day, you're going to get all these fintechs, all these form factors. Everybody's got bright ideas, but what problem are you solving? And if you solve a problem that is a pain point to the consumer, and in solving that problem, you make it easy for him to use that form factor or the QR code or whatever it is to be able to buy goods and services, you've solved the problem. Whether it's QR code, tap and go, mobile banking, it doesn't actually matter. And again, it comes down to user experience. So and trust. So I think guys like SnapScan and Zap have done an amazing job in pioneering and getting this technology out to the market. But it's about, can the people trust it? Can the consumer trust it? And is it easy to use? That is why QR code works so well in an e-commerce environment, because you're actually scanning a code and you're not depending on a physical device. But if you go into a store, you'll find the QR codes are very limited because of the user experience. So we've got to bridge that divide between the two to make it easy. If it's not seamless, guys, and there's no trust in it, it'll die.
Thanks, Hassen. So we're almost out of time. So I'd like to just pose a final question to each of you. There's a common recurring theme that I've seen in some of the questions as well, where people ask about, how do you enable this digital payments acceptance, especially in some of the more rural areas that, do not have the necessary infrastructure, the smaller traders, how do you create a more frictionless type ecosystem to enable this? So Herman, maybe let's start with you, and if you could also give some of your concluding points as well.
Sure. Thank you. Thanks. Great question. Look, I think the Chinese model and the Indian model for me are the destination here. And that really talks to the fact that you start, and you use the word, Rishi, ecosystems. So, and the way that ecosystems are going to manifest, in my view, is going to be in super apps. And Jumia is trying to be a super app, right? Because in Jumia, for example, you can buy e-commerce, you can order food, you can order a taxi, you can book a hotel, you can book a flight, you can top up your airtime, you can pay your bills. That's one app. You can live your whole day, you never leave the app. Now, that's a long way from where WeChat is and TenPay is, but ultimately, I believe that's where mobile money is going. So all the mobile money players are rolling out e-commerce, bill payment. Well, what are they doing? So you've got telcos rolling out ecosystems from the wallet outward. You've got Jumia rolling out ecosystems from the shopping outward, right? And I think ultimately that's what's going to happen. You're going to create a super app. People are going to go into the app, and payments going to be easy, right? Because you're not going to have a QR code, in a sense, right? Because you've got embedded payments. So if you want to pay someone, you're in a restaurant, the app's going to know you're in the restaurant, and you'll pay inside the app. So the point of sale will vanish, in my view, long run. But that's the end game. Short run, I think you do have a problem in rural areas, and you've got to figure out a way to get there in the absence of smartphones. I think the way that India is going with cheaper smartphones at $20 a smartphone, that's got to be the way to go. Long run, I think we're going to start with cheaper smartphones. It doesn't make sense to try to put a hybrid system in. I think we're going to go cheaper smartphones, roll them out, and get those super apps out there and ecosystems. That's my sense. Thank you.
Thank you. Thanks, Herman. Mo, I think over to you. I think Herman mentioned app-driven ecosystem, and being the COO of an app-driven bank, maybe you can give us some insight. Your closing comments, please.
So I think if we take the African context, right? Smart applications are going to have a limited customer base, and it's a fact that we have to face until we can get the issue of bandwidth right, and the cost of bandwidth, and then the coverage, because it's no use having the bandwidth but you haven't got the coverage. So that's actually the areas that are required. And if you look at the rural spaces, and as Hassen and Herman mentioned before, if you're in the cities, you are fine, you know what I mean? But as you progressively move outside the cities, and that's true even in South Africa, even though we don't think it's true, it is true. Once you get outside the city limits of about 100 kilometers, you start having serious issues around bandwidth. The bandwidth we get at the moment that we see are all along all the major routes, because that's the routes that the telcos cover. But when you go into a rural village, it's a different story altogether. So solving Africa's bandwidth issue into the rural areas is going to be the key to solving the digitization issue. If we can't solve that issue, no matter what we roll out, it's not going to work. And that's my view.
Thank you, Mo. Hassen, closing comments from you, and also, particularly interested in your view on how this is going to impact the retail space as well.
Yeah, I think first of all, thanks very much for inviting me to this, and I think it was great being on the panel with Herman, Mo, and Gabriel. So it was great experience for me. I think I just want to roll it down into 2 or 3 things and I've said it over and over again. It's about trust, it's about ubiquity, and it's about ease of use. If those things are not present in what you do, you're wasting your time. For me, I've always said the consumer never goes to a place to worry about how am I going to pay. I have a saying, it goes like something like this: the payment should be the silent hero of the transaction. Nobody cares how it happens, it must just happen. The consumer is there to procure a service or a good. So whether it's a bank or a PSP like ourselves or a fintech, our job is to make sure that that payment experience happens seamlessly, irrespective of what the environment is, whether it's in a city or a rural area, and we've got to find ways of bridging that divide. And I agree with Herman. I think cheap smartphones are the way to go to solve the rural problem. Otherwise, when you look in Africa, they've used USSD, they've used other mechanisms to do it, but it doesn't really work. The user experience is very poor. So cheap smartphones would do it. But I just want to leave the audience and the panel with the thought that trust is the big thing, ubiquity and user experience. For me, And that's what retailers are after as well. They never want their customer to walk away because they can't make a payment or the user experience was bad. So that for me is key, and I think that's what we need to build on. Thanks very much, guys.
Thank you. Thanks, Hassen. Gabriel, finally over to you. Closing comments from your side, and where do you see the international payment associations playing in the future, especially in Africa?
I think foundationally that infrastructure creation and the ability to have low-cost connectivity and ubiquity around electricity supply is absolutely key. I think that we are starting to see orchestration thematically becoming important in the way that technology is stood up. And I think that when we think about the expansion of digital payments across Africa, it's not necessarily going to be a function of the traditional incumbent players around the telcos and the fintech that can solve some of the pain points in market, because some of those pain points are quite bespoke. If we think about the solutions required within the agriculture space, if we think about solutions required within healthcare, and if we think about solutions required in education, and there, in those environments, payment becomes a feature. It doesn't become the primary product that you would necessarily deploy. And so I think the role that we want to play is one of enablement. We want to double down on our commitment in terms of financial inclusion to bring more people into the formal economies across the continent. And we want to partner with those entities that's going to allow us to solve these very particular pain points within these sectors as they evolve. And hopefully we can play a role around creating commonality around how those services are stood up and how it's orchestrated in order to solve the very particular pain points for the consumers, and expand it across borders. Like, the Jumia example was absolutely spot on. How do we think about opening up the way that trade happens, that we include the poorest of the poor straight through to the largest corporations? Yeah.
Thank you. Thanks, Gabriel. Gentlemen, thank you so much for being panelists on this first of the Africa Payment Focus discussions. Really appreciate your participation, and look forward to perhaps hosting you again in the future. As I say, this is going to be the first of multiple Africa Payment Focus events. Thank you very much to all the attendees, that attended, and we will share details of the next session in due course. Thank you so much.
Thank you. Thank you for having us.
Thank you very much.
Thanks.
Keep well. Bye-bye.
Thanks, Rishi. Thanks all. Bye.
Bye.
Thanks. Bye-bye.